Hi, and welcome to Northern Graphite's Investor Day. I'm Brian Borzakowski, your host for the next hour. The world's climate goals could be at risk without secure, reliable access to graphites, a key input in electric vehicle batteries. As demand for the commodity increases, so do the opportunities for North American investors. Today, we'll explain why graphite is the rising rock star of the energy transition. First, we'll get an independent view of the graphite market from the Economist Intelligence Unit. Then Northern Graphite's leadership will talk about what it's doing to meet demand for the mineral. Before we start, I'd like to draw your attention to Northern Graphite's usual disclaimers about mineral resources and forward-looking statements regarding this investor event, and commentary from Northern Graphite that includes certain forward-looking statements within the meaning of applicable Canadian securities law. Forward-looking statements and information are frequently characterized by words such as plan, expect, project, intend, believe, anticipate, estimate, potential, possible, and other similar words or statements that certain events or conditions may, will, could, or should occur. All such forward-looking statements are based on assumptions and analysis made by management based on their experience and perception of historical trends, current conditions, and expected future developments, as well as other factors they believe are appropriate in the circumstances. Later on today, we'll be holding a roundtable where you get to ask questions, which you can do by opening the Q&A box at the bottom of your screen. You can ask questions at any time, and we'll get to them in the panel. To kick things off, I'd like to welcome Matt Sherwood, Global Economist and Lead Commodities Editor with the Economist Intelligence Unit, to give us an overview of the graphite market. Matt, the latest issue of The Economist is all about China and EVs. Tell us what this means for graphite.
Well, it means quite a lot, as we're going to see in the next, the next 15 minutes or so, as I take this opportunity to, and just a big thank you to Northern Graphite for this opportunity to speak to your investors and the wider media. Before proceeding and answering that question, I should also say that EIU and The Economist have a proud and long history of editorial independence, and so the views expressed in this presentation and slide deck are those of EIU and not Northern Graphite. But to get back to your question, that's indeed what we'll be going through today. It's key geopolitical trends that will shape the graphite market. We'll start off with a bit of a macroeconomic outlook first to set the stage, but really this US-China rivalry is going to be driving a lot of global developments, and that's feeding through to the electric vehicles market, as well as then also certainly the demand for graphite. And that's resulting in a return of industrial policy, even in the US, and what we sometimes call resource nationalism, which is this rise of protectionism in the minerals market. We'll also present our outlook for electric vehicles and the implications for graphite, and then we will finally present our medium to long-term forecast for graphite demand and also what it's going to mean for prices. So looking at the global macroeconomic backdrop to all this, things are settling down quite a bit after the volatility of the past few years. What we have here is a heat map that we often present to our clients and audiences. This is looking at growth on a country basis, real GDP in 2024. It is a heat map, so the redder, the better. That's hotter, stronger growth. Bluer is colder, like many of us are experiencing in the Northern Hemisphere at the moment, and that's where we're expecting much slower growth. Now, you can draw a line from the lower left-hand corner to the upper right-hand corner, and essentially everything to the left and above is where you're going to be seeing slower growth, which is North America, Europe, and we'll see stronger growth in more the emerging, developing world. And that is something that's going to be playing out for quite some time. Actually, we could probably replicate this chart many times over in subsequent years. Basically, growth is going to be led by by Asia, and Europe and US will be settling into more of a modest growing recovery stage. In terms of this coming year, we expect a soft landing for the United States. Europe is starting to see some green shoots after a very sharp slowdown in the last year or so. We are expecting to see China's growth is going to be weak by historical comparison, but it is still relatively strong. And growth in Asia is going to be led by other countries now. There are other sort of geopolitical risks that we're all very well aware of at the moment. But in terms of a baseline forecast and where we expect to see growth and demand settling in, it is kind of a stabilization before the global economy starts to grow a little more quickly and goes into more of a recovery stage, certainly in terms of the Western world. Now, we at The Economist and EIU have been writing about this rising US-China tensions for many years. China's economic and now military power is rivaling that of the US's now, and it has taken on, at least the relationship and this rivalry has taken on more urgency, certainly in the last few years. And relations worsened further under Trump, but there's been remarkable continuity under the Biden administration, even if the tone has maybe changed a bit. Now, this rivalry has morphed into a series of tit-for-tat mini trade wars, especially what are called strategic sectors. And what we're calling strategic sectors, or at least governments are, is increasing. Now, the Biden administration is focused on technology exports to China, most notably AI and more advanced semiconductors. And China is retaliating, and its weapon of choice is to leverage its dominance of critical mineral and rare earths supply chains. And so we'll have a little bit more on that in a bit. But EVs are the next theater where this is playing out. So it may be a coincidence that the cover of the newspaper, as we call it, the magazine, is about China and EVs, and we're having this meeting today. But it's no coincidence that it's getting coverage. Now, specifically because of the big changes that we're seeing in this space. Now, it's worth remembering that 5 years ago, Chinese exports of cars accounted for about a quarter of what Japan was exporting. And now, if we believe the latest Chinese numbers for 2023, it's become the world's biggest exporter of cars. And by 2030, China could double its share of the global market to a third. And this would certainly end the dominance of the West's national champions, especially in Europe. So these developments are behind a return to what we'd call industrial policy in the West. Some people see it as another way of another form of protectionism, if you will. But measures have been veiled especially as job creation, infrastructure investment programs, and this has all happened during COVID, and now that governments are trying to tackle climate change. Now, in the U.S., we had the Inflation Reduction Act, IRA, is a big game changer. It's a giant leap forward in terms of the green transition and industrial policy. Now, the chart on the right probably understates the true impact. It's at least probably more like $500 billion US dollars, but it could reach $1 trillion once all the subsidies are really paid out. And the other factor of IRA is that it has a heavy Buy American element, which we will talk about shortly when we get into more detail about EVs. But the focus is on reviving U.S. industry, and we're seeing that with the Bipartisan Infrastructure Act and the CHIPS Act. And what IRA has also done is sparked a subsidy race in the West. China was already heavily subsidizing its industry, EVs in particular, but many others. And Europe's come forth with its European Green Deal. Now, that doesn't quite have the bang for the buck that the IRA does, and its focus is more on heavier regulation. So there are carrots, there are investment incentives and subsidies for EVs, but there are sticks as well. And these are in the form of domestic emissions trading scheme and something called the Carbon Border Adjustment Mechanism. Just rolls off the tongue, doesn't it? But these are basically the CBAM are tariffs based on carbon footprint. Now, these don't yet apply to graphite, but this is one to keep an eye on as this program gets implemented and rolled out in Europe. And just like IRA, the European Green Deal and CBAM have China firmly in its crosshairs. Now, critical minerals and rare earths have also, even before EVs, have become the theater where much of this rivalry is playing out. And this is owing to China's dominance of the sector. It's not just graphite, it's all the critical minerals you can see there on the charts on the left. But to focus in on graphite, China accounts for around 70% of production and essentially all processing. Now, we have highlighted previously in the more measures of these sort of tit for tat measures were likely to be in the works, and indeed, neither U.S. or the Chinese governments have disappointed on that front in recent weeks. China's implemented export restrictions on graphite. This is not a full ban, but its aim is to retaliate against individual Western firms. For its part, the U.S. has clarified some of the EV subsidy rules that were introduced by IRA, specifically the Foreign Entities of Concern, FEOC. Now, China is definitely the focus, although Russia, North Korea, and Iran are also included, but don't have any doubt, this is really about China. Now, under the FEOC, batteries made in China do not qualify for the IRA tax credits that we're going to even talk about shortly. And from 2025, the same restrictions will also apply to critical minerals. I think it's worth noting also that the ownership threshold for FEOC to determine whether a company falls afoul, if you will, of FEOC regulations is just 25%. Now, with this as a backdrop, we forecast rapid growth in new EV car sales. And this should not surprise. Most of you will have seen these growth forecasts, very sharply sloping curves. It's all down to the ambitious government targets to mitigate climate change. Sales of new EVs, we expect, these are our forecasts, will more than double over the next 5 years. And they will increase by at least another third in the following 5-year period. And in total, production and sales of new EV cars will treble between now and 2023. Now, it's not a parabolic shape or an upward sloping curve we have. We expect growth to remain strong, but to tail off a bit in 29-33 before accelerating again. This takes into account the issues we've been discussing already. This is not a demand issue. Demand's almost going to be inexhaustible for EVs, but this is really about supply. And we're expecting looming shortages of material and issues with infrastructure. And governments may have to push back some of their very ambitious targets a bit. Europe especially faces shortages. There's a view in some areas that we might see shortages of batteries on a global basis, and this gets down to trying to find the necessary materials that go into these batteries. But all that said, regardless of we're talking about 3 times, 4 times, 5 times the market grows over the next 10 years or so, to make no bones about it, demand for graphite will be strong. Now, EV sales in the US will expand at an even more rapid pace owing to the tax breaks that we've already mentioned. IRA provides a tax credit of $7,500 to EV buyers. Now, that's as long as final assemblies in North America. Half of that subsidy, the requirement is that 50% of the value of battery components be produced in North America. And other half of the subsidy requires that 40% of the value of critical minerals are from the U.S. or free trade agreement country. And that critical mineral share will be rising to 80% by 2027. So we've already had more than 15 new U.S. lithium-ion battery gigafactories or expansions being announced since 2021. It's created this, what is being called the battery belt, from the upper Midwest down into even the parts of the U.S. South. And this is going to be a big boost, certainly in North America, for demand for battery anode material. Now, finally getting to our forecast for the graphite market specifically. With all that as a backdrop, this strong demand for EVs, this US-China rivalry playing out. Often I do these presentations for other minerals as well. Often we get into a little discussion about the risks that we might face in terms of battery chemistries. It's an issue for obviously what happens with lithium, nickel, cobalt, but it's not an issue for graphite. Now, graphite is an essential material for production of anodes in EV batteries, and there's no current substitute. And while there is work on that, especially in terms of silicon, it's not likely to have a solution anytime in the near future. So with that in mind, we are expecting very strong demand from the global EV industry in terms of battery applications. As recently as 2021, batteries accounted for about a quarter of natural graphite consumption. We expect that to be about half by 2028. So demand for graphite in 2025 is going to double that from the EV industry, is going to double that of 2022. It's going to double again in 2030, and it will be increased by another 1.5 times over the next 5-year period. So when it's all said and done, we are looking at demand increasing by more than 6 times between now and 2035. Now, the reality is China is still the big player, as we've already noted, at least 2/3 of mined supply, almost all, essentially all of the process supply. So in the short to medium term, the uplift for graphite is going to largely be in the natural space rather than synthetic. And we've also had this risk of disruption, which has increased significantly in light of those trade wars that we're talking about. So we expect that this will boost demand, not only is there a boost in demand for graphite, but there's a boost in demand for ESG friendly, if you will, natural supplies outside of China. So with this happening, the graphite market is expected to develop a production deficit. We put it at around 2025. This will last until the early 2030s, at least. And because of this, global stocks are going to be run down and prices will rise. Now, graphite's not a traded commodity, as everyone probably in this meeting is very well aware of, but we do expect to see an emergence of some benchmarks based outside of China. And regardless of what the true price is, we're big believers in supply and demand. And if demand is outstripping supply, invariably prices do have to come up. Now, China will also continue leveraging its dominance in production and export of graphite. And so this will put more pressure on local production. North America's production of mined and processed graphite and downstream anode materials will increase strongly over the next 3 to 5 years. And that will be led by Northern Graphite and others. And government subsidies will still play a strong role. This will support mines and processing plants to reduce dependence on China. So in conclusion, just to say that we expect demand for graphite is going to be extremely strong in the next 5 to 10 years. Prices will rise as markets go into deficit. And this is against a backdrop of trade wars playing out in the EV market. This puts a premium on lining up supplies from producers outside of China and closer to home.
Thanks, Matt. That was a great overview of what's happening in the graphite market. This is a good opportunity to hear from our next speaker, Hugues Jacquemin, CEO of Northern Graphite. Hugues, you just heard about the issues in the graphite market. How can Northern Graphite help overcome the challenges facing the energy transition?
Thank you, Brian, for your question, and good day to everybody. I mean, the West really needs to build graphite capacity to compete with China and drive the energy transition. That's the main point. The onus here is on the entire industry to move faster and bring on significantly more graphite capacity to market in the West. It is time for our governments to back graphite miners like us with incentives, grants, and credits. As for the battery makers, automakers, and OEMs, they have to sign offtake agreements to guarantee supply. This must be done at prices that will support the significant capex that has to be deployed, and more transparency in pricing is required. Without all of us pulling in the same direction, the EV revolution in the West will not happen. As North America's only producer, Northern Graphite has a first mover's advantage, and we plan to leverage that advantage. Following China's export curbs in December and the US Foreign Entities of Concern measures and the US Inflation Reduction Act, graphite markets outside of China are already tightening. In fact, today, we have more customer demand than we can supply, and we are already looking at putting some of our clients on allocation for certain products to ensure that everyone has access to the material. That's why we need to ramp up output at our Lac des Îles mine in the short, medium, and long term. You'll be hearing more about this from Guillaume, our Chief Financial Officer. In fact, at the end of the first quarter, we'll be moving from 4 to 7 days a week of production. And to support the increase in capacity, Kirsty, our Chief Operating Officer, will be sharing important news about how we intend to extend the mine life at Lac des Îles by at least 8 years. In Namibia, we plan to restart our Arcangende mine in the next 12 to 14 months, and we are on track to start construction of North America's largest battery anode material plant in Baie-Comeau by 2026. As we make these investments, it is of critical importance to design our growth strategy to be modular. We have to grow the company with demand and to de-risk investments at every stage of every project. As the global economy recovers and the energy transition gets underway, so will demand for industrial uses of graphite. Everything from refractory bricks in steelmaking to heat management in electronics or graphite plates for fuel cells. Graphite is more than the most important component of the lithium-ion battery, where its sole role is to store all the lithium ions in the anode and provide the charging capacity. Its metal replacement material with similar conductive properties to copper, but it's 5 times lighter, making it ideal to manage heat and electrical conductivity where space and weight are critical. The growth of graphite application is also linked to GDP. And as the global economy recovers, graphite demand will rise across all the segments. Even now, graphite demand for most industrial users is growing at twice the rate of GDP. For lithium-ion batteries, it will grow exponentially, expecting demand to be 7 or 8 times what it is today. Graphite is critical to the wider energy transition, and this is why we are investing in our downstream industrial offering to meet coming demand. We're building an integrated mine-to-market company, partnering and investing with our customers who can provide the insight we need. Graphite is not a commodity. It must be sold, and the knowledge of the application and the value it provides is ever so important. We as Northern Graphite are in a pole position to leverage the energy transition. So now it's up to us. Let's make it happen.
Thanks, Hugues. That's a good setup for our next speaker, Kirsty Liddicoat, Northern Graphite's Chief Operating Officer. Hugues just teased some of the operational changes happening at your company. Can you give us some more details?
Thanks, Brian. It's a really exciting time for us here at Northern Graphite, and I'll start by saying our strategy has changed. We're not the same company we were even 18 months ago. We've moved from being a single asset company, the Bissett Creek project in Ontario, to a full-blown miner with a Lac des Îles mine in Quebec and our Arcangende mine in Namibia. Bissett Creek is near shovel ready, with construction set to begin late 2025 and first production of 44,000 tonnes per year, forecast to begin in 2026. It bears repeating, as North America's only graphite producer, we're poised to supply the unfolding energy transition. Graphite from all our projects has been qualified as battery grade, and recent test work on our Lac des Îles material show it performs at or above current available commercial standards. Mining is critical to the energy transition, but only if we do it right. And because of this, we're redeveloping our ESG strategy to align with the concerns of our customers and what we're generally seeing in the West, that we do what we do in a sustainable manner. As such, we have targets in place to be carbon zero by 2050 and have a carbon neutral product line by 2039. Lac des Îles is now our cornerstone asset, and it will be at the heart of our strategy to supply North America's EV revolution. The mine is ideally situated to feed the coming gigafactory boom along the US-Canada border. We could not ask for a more mining-friendly jurisdiction than our partner here in Quebec, the poster child for Canada's green revolution. Yesterday, we announced a new mineral resource at Lac des Îles that extends its mine life by about 8 years at current production rates. We're talking about 3.29 million tonnes at 6.4% carbon for 212,535 tonnes of contained graphite in indicated material, an additional 1.4 million tonnes at 7.4% inferred. That's a huge leap forward for a mine that on paper was supposed to have been reaching the end of its life this year. Our phase 1 drilling just to the west of the pit showed over the course of 2023 has shown significant potential already, but we have 11 additional targets that we're looking to drill in 2024. And these are out to the west, and we see over the majority of our lease. Subject to change, our current timeline at LDI as follows: a new reserve estimate and mine design in Q1, and we've commenced our permitting process to bring our new pit online in 2025 for continuous operations. Finally, there's our Okanyandi mine in Namibia, one of the most mining-friendly jurisdictions on the African continent. We plan to restart early next year, and it will be the focus of our global expansion as the energy transition unfolds in Europe. We have easy road and rail access to a deepwater port in Walvis Bay, with direct shipping to Europe's largest ports. Okanyandi will start at 31,000 tonnes per year, with the opportunity and resource base to scale that quickly as the demand for battery minerals rises. And we see there's an opportunity to mine in a way that's more sustainable. So our new Okanyandi mine will have a reduced carbon footprint and improved sustainability. We're implementing a solar farm and dry tailings so we consume less water. And by moving our mill to the mine site, we'll increase our processing capacity and eliminate the need to truck material along rural roads and through communities. We're committed to supporting the local economy, and we're targeting a diverse workforce that is 50% female, and we'll be building capacity in local suppliers. Okanyandi is set to become a very important asset to the energy transition. And when we add to our Bissett Creek project in Ontario, graphite from Namibia will qualify for use in battery making in North America and for processing in our battery anode plant in Baie-Comeau, Quebec. Full development will take 14 to 16 months once financing is available, with the intent to resume production early in 2025. These are exciting times at Northern Graphite as we build our mine capacity in parallel with demand from the EV revolution. Let's make it happen.
Thanks, Kirsty. We understand how the company is positioned operationally. Now we're going to learn about how it will finance its growth. Who better to answer that question than Guillaume Jacq, Northern Graphite's Chief Financial Officer. Guillaume, give us an overview of the financial health of the business.
Well, thank you, Brian. Good morning or good afternoon to everyone. When speaking about our financials, what we should say first of all is that our top-line performance is improving. Q3 was our strongest quarter ever from a sales volume and revenue perspectives, and we are entering 2024 with a bright financial outlook. Our sales have been rising since the second half amid tighter markets, and the outlook improved even more after China announced new export controls on battery-grade graphite on October 20th. So we're still watching how this will play out, but while we can say that the favorable trend continued through the fourth quarter, and while we're cautious about the state of the global economy, we are hopeful that the strong demand will continue through this year. For that reason, as Hugues said before, we'll be increasing output at LDI at the end of Q1 to meet customer needs, going from 4 days a week of production to 7. Secondly, we have a healthy cash position. Our current cash position rose from 700,000 Canadian dollars at the end of Q2 to 2.2 million at the end of Q3. Thanks to the working capital measures on inventory we have implemented, as well as thanks to the improved sales volume we have seen over the past 2 quarters and the additional financings. We completed 2 financings in recent months, one with electric royalties based on a royalty on Bissett Creek, and another one with Sprott Resources Streaming and Royalties, which consisted in an additional senior secured loan and a royalty pegged to the production from Lac des Îles. At the end of Q3, we had 17 million of working capital, mainly consisting of inventory. And in Q4, we did the Sprott financing for $3 million, which will go to finance the working capital for the next 12 months, and also to finance the expanded outputs at LDI. So to sum up, our cash position has improved significantly, and we are in a much more comfortable position for the months to come, in the next 12 months in particular. So finally, 2024, it will be a year of capex at Northern Graphite. In the next 12 to 18 months, we'll be looking to finance a number of growth initiatives in Canada and in Namibia to develop our raw material potential on our 3 mining assets, as well as our downstream strategy toward batteries. Our priorities will be to focus on proving out reserves and resources at LDI and arriving at a new mine plan, as well as restarting Okanjande in Namibia. To finance this capex program in current equity markets, we'll stick to our strategy of avoiding unnecessary dilution. So we'll pursue financing on a case-by-case basis, drawing on 3 key sources of capital. First, the customer offtakes. We are advancing discussions with potential partners, including close to a dozen auto and battery makers and OEMs, 2 royalty and debt streams, and finally, government subsidies and grants. We are also in advanced talks with governments at all levels in Canada, US, and Europe to tap into green energy incentives. Our global financing strategy is to have each of these sources of capital accounting equally for about a third of our needs. So finally, it's important to reiterate that we are taking a non-dilutive, modular approach to our growth that allows us to de-risk our investments significantly. That means expansion at our mines will be done in phases and in parallel with growing market demand for graphites. And that also goes for our battery and non-material plants in Baie-Comeau, which will be built in modules and eventually ramp up to 200,000 tons per year when the market's ready. So thanks for your attention, and back to you, Brian. Thanks.
Thanks, Guillaume. I'd like to bring back Matt from the Economist Intelligence Unit, Hugues, Kirsty, and Guillaume from Northern Graphite. We just heard all of your presentations, and now I have some questions. Before I ask the first one, anyone listening in, and thank you all for being here again, use the Q&A box on the screen below. So Matt, I'll direct this first one at you. You mentioned that prices are going to rise. I wonder, though, you did also mention in your presentation that pricing is a bit opaque. We don't have sort of the same benchmarks as we do for lithium and other minerals. How might that impact those gains? And is that something that you think could be fixed at some point where we will have a clear view of price?
Yes, thank you, Brian, for that question. I think what's going to happen is, I mean, is most people on this call, and certainly my hosts here at Northern Graphite can tell you, I mean, the price is all dominated by what's happening in China at the moment. It's where things are heavily subsidized, and it's all based on an export price that China sets. Now, as more and more, as China plays its game of restricting exports, and the market's increasingly having to go to other suppliers, whether it's some of the big players in Africa or certainly here in North America, there will be a development of a benchmark price at some point. It will become more readily tradable outside of China, and there will be some more clarity on that. I think because of the demand, I think both suppliers and customers are going to demand some way of being able to assess the market. And because of what's happening on the supply and demand side of things, prices will go up, and we'll start slowly. It will take some time, but we will start getting more clarity on this, and we'll have a better idea of the true price of graphite.
Hugues, I wonder to you, just not having that price, how does that impact your own plans? Does it make it more complicated to plan ahead when there isn't sort of a daily price that everyone can see?
Yeah, thanks for the question, Brian. I think the reason why the price has been so big in China is because you have 3 large producers of graphite material and 3 large battery manufacturers buying the graphite from these 3 suppliers. So, whatever we see in China today is basically not what those guys are buying, and that's probably 15, maybe 20% of the market, not more than that. So, I think as the market grows and as these gigafactories are built across the world, there will be a lot more transparency like there is for lithium and for these other minerals that are being used in the battery. And therefore, I'm very confident that our customers will recognize the value of what we provide, and we will be able to come to an agreement that the price that's fair and enables us to basically invest the capital that we have to invest. And it will also help with the governments, and it will also help with the bankers, because if we don't have a lot of transparency on price, how do they know what to set their incentives at, or how to lend that money for the projects that we need in order to deploy the capacity? So eventually it will all clear itself out. And I think it started in October when China started to control the exports. We've seen a lot more activity in the market. We've seen a lot of changes with customers being, let's say, more inquisitive about what the real cost of a material is and what an acceptable margin may be. And, as we put out in our Tale of Two Markets piece that we published not so long ago, the Tale of Two Markets is going to come, is going to come and be real. And therefore, we're very confident that over the next 12 to 18 months, we will be able to have a much better view of what happens to pricing. Now, notwithstanding all of what I've said now, it's mainly relative to EVs. But, we are and have been servicing customers for 30 years in the marketplace, and we will continue to do that. And in that market today, certainly demand is increasing, and certainly customers are willing to pay a little bit more for the material. And so we're already starting to see the impact of what China is doing outside of the EV markets, where, we're a significant player in North America.
Okay. Let's get into a little bit of Northern Graphite's operations. We got a question from the audience asking about that Northern Graphite has an option to buy controlling stake in NeoGraph, which expires in February. What's the status of this transaction?
Yeah, as you said, the option is expiring in February. We have a very long-standing relationship with NeoGraph. We've been supplying them for 30 years. We have an excellent relationship, and the intent for us is to work together to grow the market. And there are significant opportunities in a number of different areas. And so, we want to continue to work together. And, although the market conditions have been quite difficult over the last 12 months for a lot of players, including ourselves and NeoGraph, especially on the capital market side, but not only. And so basically, as time goes by, we'll be communicating to the market, how we intend to move forward with that option. But both parties are working together and are expecting to continue to collaborate as we have in the last 30 years.
Great. Guillaume, question to you. We've talked a lot about all the plans that Northern Graphite has. And can you talk more about how you plan to finance that hundreds of $millions in capex over the next few years that you need to spend in Canada and Namibia to extend mine life at LDI, bring Biscuit Creek into production, and the various other projects you have going on?
Right, thanks. Well, as we mentioned before, I would say that we approach each investment on a case-by-case basis. We always target non-dilutive solutions to finance our capex requirements, with the ambition to have an ideal mix between the customer offtakes, the debt stream and royalties, and the government grants and subsidies. And our ideal mix is about 1/3 for each financing option. So for 2024, our priorities are to put the capital first on the continuity and the expansion of our LDI plant in Quebec, together with the restart of our Namibian mine in Okanjande. Then we target to start up our Biscuit Creek mine in Canada in 2026, and our BAM production in Baie-Comeau at the end of 2026, beginning of 2027. All of those investments are discretionary and will be launched as funds becomes available. So that's true. The investment program is without a doubt significant, but it is modular for the mining part and the BAM part. and it will be built in phases in parallel as the market grows, and we will raise financing accordingly.
Great. Kirsty, you mentioned ESG, and I'd like to expand on some of those ESG plans. I mean, that's becoming a much bigger focus for investors today. Talk a bit about Northern Graphite's plans to make sure that ESG is a focus for you guys.
Yeah, thanks, Brian. And you're spot on. ESG is definitely becoming much more of a focus. Because we are seeing that one of our key deliverables this year as a company is actually to revise and update our ESG strategy. And while that's going on in parallel, we're running a number of initiatives to help us on that way. We have just completed a carbon benchmark or a carbon footprint for last year, for 2022 as a baseline. And from there, we'll be building a carbon roadmap so we can actually hit our targets of 2039 and 2050. As well as that, we're looking at ways in our current operations that we can just bring down our carbon footprint as it stands. So moving to renewable fuels, we've talked about the solar in Namibia and what we can do on water reduction. On top of that, we are looking at how we can engage our communities in a different way to create long-term sustainable value, particularly as we bring our new projects online. That opportunity to rethink, to engage and create value for the community is something we're going to be looking at, whether that be through how we source water in Namibia or how we actually engage our First Nation partners in the Bissett Creek project. So there's a lot of pieces at play and going on while we're building our holistic strategy to underpin our ESG strategy.
What about just the fact that Northern Graphite focuses on natural graphite versus synthetic? I understand that that's more attractive from an ESG perspective as well.
Yeah, in general, the carbon footprint of natural graphite is lower than a synthetic graphite. And so our aim there is just how do we make that even more attractive? We're really lucky at Lactazil, we're already on a renewable power, but we can look at our fuel consumption in particular, and then our other assets. How can we do that? How can we make the most sustainable product that we can to service the market? Because it is what the world is starting to demand.
Another question from the audience. There's a lot coming in, which is great to see for Hugues or Guillaume. With all the good news and strong assets, there's a question about why the company's still at a 52-week low share price. What's being done to support the stock price?
Yeah, I think that's a good question. I mean, it's been a very difficult year overall for stock price, and not only for Northern Graphite, but I think all the graphite players out there. If you look at all the graphite companies in Australia and in Canada that are listed, you can see that over the last few months, the market cap of those companies has come down significantly, more than 50%. We ourselves have been trying to do two things. The first one is focus on the business. We are an operating company. We're generating cash flow. So, our first and foremost responsibility is really to operate the company, to increase capacity, to advance our projects, to work with customers, to build capability on the R&D side, to be able to develop materials that our customers are going to want. So we've been really focused on execution with 100 or so people that are working in the company today, and trying not to focus too much on the share price. That's the first one. The second one is we've been focusing on the share price together with the communications team and with Guillaume, and we've been working to communicate very clearly to investors about what we're doing, what the market is doing from a graphite perspective, hence, the conference we're holding here today with you. And at the same time, we've been developing some of these major announcements that we've made, for example, yesterday with the extended resource and the 8-year additional life mine that we have in Lactazil. We've been working on creating those opportunities and communicating them as clearly as possible. And we've also been more involved on social media and other marketing activities, and you'll see more of that as we move forward.
Another question just came in for you or Matt, potentially. It's the viewer has a question about the shortage of natural graphite in future years versus synthetic graphite. There appears to be excess capacity outside of China and also within China. At the same time, new mines are opening in Southern Africa and elsewhere, which could add to excess capacity. He just wants to better understand the issue here of what's going on.
Yeah, I think, of course, Matt, feel free to also jump in. I'm sure you have a very good viewpoint. But from our perspective, if you read all the research that's out there, everybody's predicting that by 2025 there will be shortage of graphite. You have to think that the large gigafactories in Europe and North America, they're going to come on stream in 26, 27, not before that. Mm-hmm. And so today the demand is still very much in China. And therefore, we're not going to see a lot of shortage in Europe or in North America because most of the production is still very much in China. So if a shortage occurs is in China, which is, I guess, one of the reasons on top of what we talked about earlier in Matt's presentation, it's also the fact that China wants to make sure they have enough of that material for themselves. Let's not forget, that's probably a big point. In terms of large amount of capacity coming on stream, I mean, if you think that, the market today is about 1.2, 1.3 terawatt, and we expect it to grow to between 5 and 7 terawatt by 2030. That means that the amount of graphite that is consumed will have to multiply 6 to 8 times what it is today. I don't see all that capacity coming on stream and being able to basically cover that 6 to 8 times growth that we're going to see. So yes, there is capacity coming on stream. Yes, it's always harder than what people think. I think as Northern Graphite, we feel pretty good because we are already in the business. We are already producing. We have the expertise. We have mines that have produced in the past or that are producing today. So, we feel pretty good about being able to bring that capacity online. And it's really all going to play in 26, 27 when these big gigafactories come along. And in the meanwhile, the market will auto-regulate itself. But I can tell you, we're getting a lot more calls from customers today than we were a year ago. And those calls are sometimes a lot more energetic than they've ever been because the sense of urgency is there. So, I don't really see a change in that forecast. I think by 2025, there will be major shortage of graphite around the world, and it will only increase from there. But Matt, feel free to provide your insight as well.
Well, yeah, thanks, Hugues. I mean, I would just reiterate what you've said. I mean, we and others love to present charts and show, this really steep curve, and we will stand by this forecast. The reality is there are going to be some hiccups on the way sometimes. So what we're seeing, there's some signs that maybe 2024 may not be quite as strong when it comes to certainly on the EV side. Now, that's largely because it's not because of demand for, let's say, EVs, but it's more about the sort of capacity constraints, infrastructure, charging stations, these sort of things. So that's what's possibly holding things back in the short term. Exactly when in 2025, or is it not maybe until maybe early 2026, possibly? But the reality is if governments come anywhere close to the targets that they are setting, and IRA is just taking a little while for all that to feed through. Demand is going to outstrip supply fairly quickly here. And that will invariably, you'll see it in the market and it will have an impact on price.
Matt, just to follow up, there was another question about saying the Financial Times has been writing that battery production capacity is or will be in the near future double the demand. Do you think that's a right estimate? And what will be the impact on prices you can get for graphite?
Well, I mean, that's someone's view that, I'd have to see the FT articles, but that they're referring to, that battery capacity would be double demand. I just don't see how that's going to happen if We know, I mean, it's still, and as Hugues has already mentioned, part of the reason, a main reason, which I hadn't mentioned actually, was that China's put in some of these export controls is to make sure that they've got the supply, because they're betting that because of these government targets that countries have, there's going to be this strong demand, and they're going for market share in Europe and the US with their automotive factories. Now, our colleagues at the newspaper would say, that's what's in that cover story. They would, it's our history. We're very much sort of liberal free traders of a sort, that maybe people should embrace that. The reality is, and the way I look at things, is how are governments actually going to react? And that's not something that the US or European governments want. They're going to protect their national champions in terms of automotive manufacturers, and they're going to do what it takes to defend them. So, if given the targets that Europe has set for the ending of sales of internal combustion engines, UK, what we have in the IRA, I can't see battery capacity, certainly in the medium to long term, being bigger than demand.
Kirsty, question for you. What's your strategy in reducing production costs at LDI mine? $900 per ton at LDI versus the average $400 per ton in Africa. There seems to be a difference there.
Yeah, great question. I mean, I think, first and foremost, there is a different cost basis between Africa and North America due to, cost of living, plus the more stringent ESG strategies that we do need to follow. That said, at Lactazil, we're absolutely focused on getting our costs down. One of the ways we can do that is actually just to increase our production. We have a lot of latent capacity that we currently pay for. So moving to a plant to 7 days a week in Q2 brings about $100 a ton off our costs straight away. From there, we are as a team looking at, the whole way through our system, our large hitting items, looking at renegotiating our contracts, and we've had quite a bit of success. Just due to the nature of the way Lactazil has been run, a lot of this hasn't been looked at for quite a long time. So, as we work through renegotiating consumable contracts, looking at how we bring in diesel, we are seeing some pretty significant cost savings that we'll start to see flow through the business. And finally, maintenance. We've got an old plant, and we really are looking at how we can optimize our maintenance there to reduce those costs as we see. So we see quite a lot of opportunity, both through a straight cost reduction, but also through an improved productivity to bring the unit cost down.
Great. Guillaume, let's get you in here. I got a question for you. You announced an additional financing for Sprott in November. Do you expect to have to do more of this to maintain a healthy balance sheet?
Well, the Sprott financing was necessary for us to safely restart the LDI plant in November, and also to plan with comfort the increased production output from 4 to 7 days a week, which we are planning for the second quarter, because of all the additional working capital it requires. So on the $2.2 million of current cash position we published at the end of Q3, we have added the $3 million from Sprott, which is good. And also our sales have been rising and they continue to be strong, which provides us with a stable income. We also have sellable inventory of finished goods available, we still have, and that constitutes our working capital base, which was, as I mentioned before, at the end of Q3, amounting to $17 million. So all of the points I just described provides us with the good visibility on our cash balance for the next 12 months. And all of the projects we talked about, Namibia, LDI exploration, Bissell Creek, battery and non-material plants, will be financed separately and specifically.
Just to follow up, and Hugues, you can answer this one as well. We've heard a lot about, just in the capital markets in general, just difficulty raising capital to finance projects, whether it's tech companies or all sorts of other businesses. Is this environment more difficult to raise capital? Maybe speak to if you've noticed any changes or how it is today.
Oh, definitely. I mean, I think anybody who's in the capital markets today running a listed company in the TSX Venture Exchange will tell you it's extremely difficult to raise capital using our share price today. So we have to become creative. I think the big advantage we have is, we have a lot of assets. We have a lot of operating assets, a lot more than what our current market cap is. So that gives us quite a bit of leverage. And we also have, current sales. We have customers who want to buy from us. So we can be creative because we can basically leverage these things to try and raise more money, especially on specific projects. Also, one of the things that we haven't really talked about, but some of these projects require quite a bit of equipment, and that equipment comes from different locations, and some of these countries are also trying to boost their own economy. And so there is also funding which is available to support projects where equipment or services are being bought in different countries that we may be able to leverage, to support ourselves. So that's what we're doing, and as Guillaume said, every project we're doing is discretionary. We're not going to step into a situation unless we have the funding for it. We've been working on it for the last 12 months, and I think we have a very good strategy, and more to come on this. But once we are able to finance the project step by step and de-risk the whole situation, then we will come back to the market, and then hopefully, people will eventually realize how good of an investment the company is, and they'll start investing in Northern Graphite more than they are today, and the share price will rise. And then when it's the right time, we'll go back to the market and we'll continue to leverage that.
Another question on funding, different kind of funding. What's the status of your efforts to obtain funding from US and Canadian governments?
Yeah, well, we've been working very hard on it. I mean, I just came back from Lac des Îles. I was there with a delegation of about 15 people from different parts of government, and we basically, took them on a mine tour and showed them all the different things that we're doing and the projects that we're working on. And so, I think I can say that I can see a lot of progress that's being made to educate and to understand what funding is available and how we can access it. So that's moving forward very well. I also think that the sense of urgency around the world is much higher than it has been because of what's happening with the China restrictions, and therefore, I think suddenly I can see a sense of urgency on the government side that I hadn't seen before. And lastly, I think, we are much clearer with what our plans are. And so it's a lot easier for us to go back to these institutions and be clear as to what we need. I mean, for example, the Canadian Infrastructure Fund, there is quite a lot of money available there. But, until we understand exactly what kind of infrastructure we need, how do we go back to them very clearly as to what is fundable and what is not, and how they can help us. So we've been also working on that, and eventually, we're also going to have to get bankers involved because all that structuring is quite complex, and we can't just do it by ourselves. So we are also looking at bringing on more expertise to support us in this exercise. But I think, times are very difficult. Using your share price today will not be really feasible unless you're prepared to really dilute the shareholder base, which we don't want to do right now. And so you have to be creative. You have to leverage that. And I think there's a better sense of urgency. And I think the governments are ready to step in and help us. But we also have to do our part.
Great. We just have a minute left. And I am just curious what it's like to be working at a company like Northern Graphite in a time where, graphite is on the rise. What's it like to go to work every day? Maybe Guillaume, how is it for you being in this market that has so much potential?
Well, it's very exciting. For sure, it's very busy, but it's very exciting and very energizing. We all come from big groups, big company, with a very organized. And when we came into this Northern Graphite story, there was a lot to organize because the company really changed a year and a half ago. But most of us who have been in this business for 10 years, and we've been thinking about this and been seeing the opportunity, and we've been putting the pieces together during all those days and all those years. And now we have this great opportunity to make it happen and put things together. So that's a fantastic journey.
Kirsty, I'd love to hear your last thoughts here.
Yeah, like I echo Guillaume, really exciting. A lot of really positive energy across the company. We certainly saw that yesterday at Lactazil. There's absolutely a lot going on, which in itself is really exciting. And the chance for us to do something a little bit special and a little bit different as we think about how do we do what we need to do in a way that is a lot more sustainable for the future, and how do we make it happen differently?
Good. Hugues, last thoughts?
Yeah, I think, time is of the essence. I think that's how we started the conversation today. I think the stars are all aligning. The sense of urgency is there. I think we have a fantastic team with lots of people from all different backgrounds, a lot of diversity. I personally absolutely enjoy myself driving this company. And I think, we'll be happy and enjoying to do that for many more years. I mean, it's just the atmosphere in the company is fantastic right now. And so, as we said, we just need to make it happen. We need to make it happen. The proof is in the pudding. And I want to just thank everybody who is on the call today, all the investors and all the stakeholders that support us. It's really wonderful when we start talking about our company, how much energy we can generate around us and outside the company as well. And we just need to translate that in our share price now. So let's go make it happen.
Definitely energy. There was a lot of questions, so people are certainly paying attention, which is great news. We unfortunately have to end it there. I'd like to thank Matt and Guillaume, Kirsty, Hugues. Thanks you again for joining us, and thank you everybody listening in for being here. If you'd like to learn more about Northern Graphite, visit northerngraphite.com, and for any questions, you can email info@northerngraphite.com. We'll have some more information on the next slide, on the final slide here. Thank you again for joining us, and hopefully we'll do this again soon.